Good morning, everyone. So, in this session, we are going to discuss about reconciliations. So, I'll just give you brief about reconciliations, like what is reconciliations, what are the different types of reconciliations. So, it means from a technical perspective and from fundamental perspective, like what are the different types of reconciliations that we actually perform in maybe fund administration, or maybe in, let's say, in any other business line which is prime broking or investment bankings and all. So let's discuss about different types of reconciliations. All right, see, we have announced almost the 50% discount on all our different recorded courses, because I'll give you link in the description, because it's the 17th Independence Day we are going to celebrate. So on the occasion of that, we have decided to offer discount to our learners. If you are interested, check the link below. All right, and get the discount. Let's focus on it, guys. If we talk about reconciliations, see, reconciliations, it means it's a verification process basically. So what do you mean verification? See, we verify the records. We verify the records of two different accounts. For example, let's say broker account versus internal accounts, or system data. If you have XYZ ERP application, and if we have, let's say, recorded data in the system, so basically we perform the reconciliations between the actual bank statement, investment statements, trading statements, and the ERP system's data. So we cross verify each and every records, line by line records. For example, let's say trade expenses, your capital call, subscription, redemption, deposit, incoming wires, or different transactions, options, derivatives, or swaps, coupon, interest payments, money market, sweep in, sweep out. There would be thousands of different transactions which we verified with the system. Now your question would be like, sir, why recon is important? See, guys, if I'm placing trades of $1 billion in system, don't you think that it should be verified and approved it even? All right, it should, correct, to avoid mistakes, to avoid, let's say, duplicate entries, and to maintain the data in the accounting system like very accurately. So that's what reconciliation is, very important. So let's talk about different types of the reconciliations. We have like stock reconciliation. Stock reconciliation, it means we are talking about the investments which we are holding in the demat account. So that holdings, will call it as a stocks. And also the other name of the same stock reconciliations, it would be like depot reconciliations, or depot reconciliations, you can say, especially the prime broking or in a corporate actions. You can see that depot is nothing but it's just account created for a different trades, which you can you can manage the trades from that particular accounts. All right, so basically here we are talking about again demat accounts. So in one demat account, you can see multiple trades and multiple securities. All right, and that securities, it needs to be verified and reconciled, I would say, because there should not be any discrepancy. The reason is, if you see any discrepancy in the stocks, then it will affect on dividends, it will affect on corporate action benefits, it will affect on all other benefits, as well as this will also affect on your financial statements as well. What if, let's say, you have incorrectly recorded inventory in the books of account? Now you just think about it. Directly your stocks mismatch or incorrect reporting, or let's say if you see any breaks as such in the accounting system, that will affect on financial statements of a business, including your P&L, balance sheets, and also NAV statement of a fund. So that's what your reconciliation process is very crucial, and all breaks, it should nullify, resolve, and commented properly. If we talk about now position, it means, guys, here we are talking about the contracts where the maybe fund managers or brokers or traders, they have signed the contracts, because they don't have a actual holding into this, but they have only the position. So that becomes your positions in reconciliations. It like options, swaps, futures, loans, or intraday, all that particular transactions that comes under your position. And this is a very crucial reconciliation, guys. If you see any discrepancy in positions, that again it will affect on the financial statements of a company, financial statements of any client. it could be trader, fund manager, any pension house, because see, eventually incorrect reporting just because of maybe let's say duplication of entries, manual errors or data entries and all, we have the errors in system, and that's what break now which has been created. But yes, all breaks it should be nullified very very quickly with the before producing any kind of financial statements. And apart from that, cash reconciliation is one of the key activity which you can see. Cash which will which will tie with your stocks position and all other transactions, including expenses and income also. Income as well as you can say deposit as well. Deposit, it means cash deposit or cash withdrawal, that all it will you can see that comes under your cash reconciliation breaks basically. Cash reconciliation which talks about only cash impact on or cash which has been let's say affected due to position and due to again stock holding or maybe other transaction. As I said, it could be expenses, income, or deposit or investments which has been received to the funds or maybe out from the funds. So that all transactions basically that would comes under cash reconciliations, and that we verified and resolve all the breaks. All right. So apart from this, you would also see the different types of recon. As I said, see, that was the one type. This is again another type which you can see, which is external reconciliations and internal reconciliations. So let's talk about first internal reconciliations. If we talk about internal reconciliations, so it means we are internally checking the records. If we talk about funds, within a funds you can see main book versus sub ledger, or maybe your other books like trial balance versus all journal ledger, or maybe let's say accounting entries which we have posted, or trial balance versus maybe you can perform verify with the P&L and balance it also. So this is how we perform actually reconciliations. This internal reconciliations you can set with any process, whether it is a data process or whether it is any document process or legal verification process. You can set up this reconciliations anywhere as and when required. It's not something standard process, because reconciliation and verification and again approval which is required for all the data as well as all the processes. So it means you can set up this process anywhere. You can set up this process even in non-banking processes, even with the manufacturing units, maybe the accounting of manufacturing or costing or any process, means any process. There are no standard parameters as such. All right. And if we talk about external process, see, external it means, see, if you have any system where you guys are performing reconciliations between custody, bank, demat and trader, trader or broking account versus your internal systems, like it could be Investron, Geneva, or it could be Aladdin, because these are the ERP system, or even Tally, QuickBook, or there are many other accounting platforms. If you are performing reconciliations between all of these applications, that becomes your external reconciliations. External reconciliations. All right. Now let's talk about other types also, because see, this one is something theoretical ways that you would have might be gone through somewhere. See, there are types like one-way reconciliation, two-way reconciliation, and n-way reconciliations. N-way it means, let's say, statement versus, you can check your ledgers, you can check your sub ledger, you can check your group ledger, or any other you can check it. If we talk about two-way, it means, for example, let's say you are verifying data like statement versus ledger. In a statement we have 100 quantity, and a ledger also we have 100 quantity or 100 rupees, whatever it is, right? So that becomes your two-way recon, because we have a two ways. One is statement, another one is the ledger. And if we talk about one-way recon you can perform verification, just a verification process. You can perform verification of or review of, let's say, a statement, ledger, or any other accounts, or any other any other entity, means anything. You can perform anything. So that becomes your single or one-way recon as well. So this was the overview of guys recon. If you want to learn different breaks of reconciliations like cash break, stock break, then position breaks, data break, real break, time break, then unapplied wire break, because there are a number of breaks. All right. If you want to learn anything as such, you can quickly call to my team. We can teach you on a different breaks. or even if you are facing, let's say, grave issues with understanding of flow of, let's say, fund business, it can be SPV, real estate, cryptos, or even any other, right? If you're looking for that, then you can connect with us. My team will help you to understand the flow of different businesses, as well as will also teach you for how you can resolve different breaks. It could be swap, options, means anything, means anything. All right. If you're looking for the same, then quickly give a call to us. We'll see you next session with a different topic. Meanwhile, you can enjoy my content, and I hope you guys are enjoying it. All right, we have already crossed 27,000 subscribers. Once we cross 30,000 subscribers, then definitely I'll give you big gift for everyone. Maybe I'll allow you guys to enroll my courses on a 90% discount. So let's see. I'm just waiting for that. All right. So we'll see you very soon in next session. Thank you.